Dive into the accounting equation and see how this is applicable, important, and critical for your understanding on the test. So the accounting equation is made up of our balance sheet accounts and the corresponding income statement accounts that flow into our balance sheet accounts. Because remember, the income statement is transitory. It resets every year. So the balance of the income statement at December 31st or January 1st is 0, but the balance sheet retains its accounts. It retains its accounts values and transfers them from year to year. Now you should be familiar with the core accounting equation of assets equals liabilities plus equity. And now we've got some other components for you to elaborate on it and help you answer some questions. Now with our standard T accounts, the format here, if you're unfamiliar, is the debit side is on the left and the credit side is on the right. Now, if plus means we're going to increase it. So how do you increase an asset? You debit it. How do you decrease an asset? You credit it. And vice versa for the other accounts. We've got a decrease in liabilities as a debit and an increase to liabilities is a credit. Why are the rest of these important? Because, well, what constitutes equity? Equity is made up of capital contributions and retained earnings. And then what is retained earnings made up of? This is one I'm going to probably mention a lot throughout our studies here. Retained earnings is made up of net income and dividends. So net income is an increase to retained earnings, whereas paid out dividends is a decrease to retained earnings. And these two are kind of like contra accounts to their respective items. So revenues and expenses make up net income. Revenues and expenses have different debits and credits. Same with net income. How do you increase revenues? You need to credit them. How do you decrease them? You debit them. A question it might tell you that assets are 100. It tells you to find liabilities. And then maybe it'll tell you revenues, expenses, dividends. And you need to calculate what equity is. So you work your way up to equity and solve it that way. So lots of back around types of questions. And this is just super important for core accounting overall. Definitely recommend being familiar with this. And if you ever see a question that relates to this, come look at this slide again. Just like in many other ones, I'll say if you see a question, it talks about the income statement, physically go look at an income statement. That will be super helpful. If it talks about gross profit, go find where gross profit is on the income statement. If it talks about the allowance for doubtful accounts on the balance sheet, go find where that is on the balance sheet. It makes it real and it makes it more applicable to real life, and you can visualize it from then on. Super important, definitely helpful for you. Always trying to be as helpful as possible. Let's talk a little bit more about the accounting equation. So as I said, some questions will require you to rewrite the accounting equation in order to calculate other account balances. Some common ways to rewrite it. So normally it's assets equals liabilities plus equity. We could also commonly rewrite it as assets minus liabilities equals equity. So getting familiar with algebra surprisingly, or maybe for you unsurprisingly if you've seen it already, pretty important on the exam. Not only FAR, but also BEC. Lots of algebra, finding x, and here we need to subtract liabilities from both sides to get it to create the formula like this. And net assets, we'll see this in non-for-profit and government because, well, there's no equity when it comes to those. That's why this section also has the statement of financial position, which is the term for those types of entities. You can't own a government, you can't own a not-for-profit. So they just have assets and liabilities, and assets minus liabilities technically equals equity, but we call it net assets because there's no ownership. And equity is value, same is assets minus liabilities. That's the value of the entity. Awesome. Now we have assets equals liabilities plus all of these other items, and if you hadn't guessed yet, all of these other items, these are equity accounts. Paid in capital plus revenues minus expenses, which this is net income, minus dividends paid out, minus treasury stock. This is going to just be another way to rewrite the formula. Be familiar with this. When you get to the equity section, come back and look and see where all of the puzzle pieces fit together.